stream. That's good. That's good.
But yes, that is who we are. We are here to continue the market updates that we're doing.
Yeah.
I'm adding your screen to the show here. We got inflation, Evergrande, supply chain, all been resolved, right?
Oh, it's great. Overnight, yeah, everything seems to have come about the way we expected, and nothing but up. So that's the only way to bet. It's funny. One of my buddies who's a trader, he hasn't traded in a few months because he just like trades whenever he wants, cash flow, and then doesn't trade. But I was like, hey, good news. Since the market stopped, since you've been gone, there's only one thing to do, and that's buy. If you can do that, he was like, great, buy now. I was like, buy now. So,
well, wait, is he back? Because then,
yeah, he started trading again yesterday. Which I'm like, why are you doing that? So he's
yeah. That's the sign of the top of the market when your buddy's back.
It's the sign that things are happening.
Fair enough.
So, but yeah, the as far as what we've got going here, we have this weekly chart up. Is it too small on the stream?
It's a little small. At least to see details, we can see the big things like Dow Weekly, the sequel 2022 Part 2.
See, the problem with this,
but if you want us to look at the bars, it's a little small.
Yeah, how do you do? Isn't there a way to like zoom your screen or something?
You can try Control and mouse wheel forward. That works on browsers. Don't know if it works on that.
I like that feature right there, but it doesn't really.
A little hard to navigate. Yeah. So, Ian, tell us. We got the subject line here. What is it? CCI? Is that what it is? No.
So CPI. So we have CPI. Yeah. So CPI is tomorrow. So if you look at usually if you're trading or you're looking at the markets, you're gonna like go ahead and kind of. A lot of traders, what they do is they know the news for the week, when to expect. Especially obviously news traders do that, but all traders trying to keep an eye on like what's potential. Like, do we have a Fed meeting coming up? Or the housing numbers going to be relevant in the place? So what you kind of do, what the general gist is you take the background information, such as, okay, here are the main topics. Well, is there anything that's coming out in the news that potentially pertains to that main topic? So if you have like a housing indicator coming up and there's nothing that really suggests any kind of shock to the housing market or care, the housing thing probably won't move the market too much. But when you have a situation where it's like, look, we've been talking about inflation for months, and we're like, you have this pressure building to each time there's like an announcement or an interpretation. So when there's anything each week that comes out with either Evergrande, supply chain, or inflation, you're probably going to be looking at a market move. When I say move, I mean volatility, I mean excitement, I mean a lot of players will enter. So tomorrow at 8:30 a.m., we have the CPI announcement, which will be relative to inflation, because everybody's still wondering what is going on with inflation. And that's
talk to me like I'm an idiot co-host who doesn't know what the CPI meeting actually is.
I don't actually know what the CPI is going to tell us in terms of like how that's relevant to inflation. I don't really know like exactly what it's measuring there.
Gotcha.
But it doesn't really matter other than the fact that it's relative to inflation, and that's the topic that the traders care about. So it's supposed to come out at one number. So you always look at it and go, okay, if it comes out at the number they expected, neutral. If it comes out above, positive, negative. So
now is this Fed related, government related? Like
yeah, government related. Yeah, government related. So we'll find out. It'll have an impact on people's interpretation. So what'll happen is tomorrow you get your numbers and then start looking at your news sources for the news reporting on inflation. CPI came out and blah, blah, blah. And so then they're going to start making their own calls as to this, then this leads to this. And if we don't do this, we're in trouble. So you get all those kind of headlines that just domino. So it's really going to be 8:30 tomorrow. It's interesting because we were just watching the market before we came on here. The market bucked a pretty good uptrend this morning, and I said to you, I like the fact that it's doing that because I'm short, but in a few trades. But at the same time, I'm like, I wish it was a little bit later, like because I wish it would have dropped off a cliff tomorrow morning. So I don't know if it's a little premature in the move, in the bucking of the trend, and then it's going to rip back up. So because if it was like really negative news, you want it to happen like right around your time release of news, so it takes the news and it compounds it. But at the same time, it could be bucking the trend just to get ripped back down hard. You don't know. Who knows?
Okay. So we're watching it tomorrow. I feel like since the three things we're tracking here, inflation, Evergrande, supply chain, any big news on that, we're going to probably point out and say, it could potentially be a pivotal moment for the storm. Because, going back to what we were saying months ago, we're basically just tracking storm. That's what you and I are doing right now. We're weathermen reporting, saying there's an inflation storm, Evergrande, supply chain storm. And, whenever there's a big news release, that's like saying, we got to see, is it going to approach land or not, right? Is it going to pick up wind or not? So we're just pointing it out, saying, hey, if it picks up wind, put the window barriers up, kind of thing.
Yeah, I mean, I think we came close to timing. We timed when the storm was picked up on the radar. That was when we jumped in the mix. But it's still moving, and it's just so damn slow. When I say slow, I mean, it's like, I guess we're in the modern day age of expecting things to instantly happen. So if it doesn't happen tomorrow morning, it's too long. But, in the terms of the stock market, like, you're just basically talking like one quarter to the next, right? That's really kind of what you're tracking, unless you really nail that exact moment, which we got the threat. And I have a feeling what'll happen is when that exact moment occurs, we'll catch that moment too. But, for the moment, it's just watching a storm. Again, it's like watching that big freight train, a big ocean liner just slowly coming into the dock. And the question is it park correctly, or is it just blow right through take the island out? I don't know. I'm looking for any major news. I don't see anything other than the up and the down, a little bit of supply here, a little bit of inflation there, something on pop culture. Like, this is like neutral news. This is like perfect. It's so easy if you just use like these headlines to decide, all right, are we just coasting in an uptrend right now? You could tell by the news if we're just kind of coasting based on like the up and down. But if it just starts slamming with like bad news or good news, you go, okay, we must be in a raging uptrend or a raging downtrend. You can definitely do that. And then use Facebook.
Yeah, I'd say we're currently coasting on an uptrend right now.
Yeah, just a little up, a little down. Keep the liquidity, because then give a little bit of the bulls, a little bit of the bears, a little bit of the bulls, a little bit of the bears. Just keep it drifting.
That's exactly what the news is, right? It's like you literally one headline. The way it's posted, everybody's used to seeing like one article followed by another article, right? Everyone's pretty much familiar with that. I mean, right now it's like one article says, "Buy now, everything's good," and literally the article under it says, "Don't buy now, everything's going to be bad," right? It's just like overlapping, but that's the story of the market too. It's like it's trickling up, right? It matches the news so well.
Melting up, yeah. Trying to see if there's anything else. GE soars after announcing a plan to split to 3 separate companies. If that's what we're talking about right now, we're just very much in the neutral. Like that's like a big headline.
Yeah, when Elon Musk is like front and center again about like, should he have been able to make that? He made a tweet yesterday. Should I sell 10% of Tesla or something? Right?
Yeah, so I have this. Perfect. You say that. I have this headline I'm looking at right now. Tesla plummets 150 billion in market cap, gone in minutes. Did Elon Musk start selling?
Yeah, so it's just like, when people are mad at Elon Musk saying, no, he's manipulating the market. I'm like, if that's what we have to talk about, then there's not much going on.
No, it's like the pop culture of the market. It's like market pop culture. So when you're talking about market pop culture, there's just nothing really.
It's like the Kim Kardashian filler news, right?
Basically, for the finance guys, for the finance nerds.
Yeah, I mean, we've talked about it. Like, I like Elon Musk, in terms of his just, get it done mentality, right? He just thinks so much bigger than most people.
Yeah.
Whether or not you agree or not with what he does, is another topic. But I'm a big fan of how he gets things done. But anyway, yeah. I mean, if we're talking about him, there's not much going on. Could also be the calm before the storm kind of thing. So I guess we'll see.
Mm-hmm. What are we trading at right now? I don't keep the market on this computer that I do these from.
36,135. So it's kind of plateaued from the plummet this morning a little bit.
Are you able to bring yours up, or is that too much of a pain right now?
A little bit too much of a pain, to be honest.
Okay.
I can try to get that ready. Other shows up.
I'd like to bring up, maybe I could show where that trend got bucked, because I don't think you're going to see it on your charts personally. Are you able to see the trend that got kind of bucked this morning, like the uptrend?
Nah.
Okay. Should be able to see this over 5 days. I might need more. Wow. Actually, that's more. Oh, wow. Huh. This is a bigger trend. A bigger uptrend got kind of bucked than I expected. Okay, let me take a picture of this and I'll bring it up on the stream.
Yeah, so I guess what is it in preparation for tomorrow's CPI meeting? Is there something else going on? I mean, as far as I can tell, news is not matched why it went down, but that's usually how it goes. The market moves and then the news comes out.
Or vice versa. It's like one or the other in terms of how they're trying to position themselves, right? Like one is like, all right, make the move and then pile on the news to pile on the positions. The other is like, don't tell anybody, and then the news shock everybody. All right, you can see this on your screen. So this is from October 13th. I don't know, maybe these are hourly bars.
About a month.
About a month, yeah. So this initial trend, if you had to call it, was kind of already ruined. So let's just not even look at that. I'm not going to get into that right now because that's different kind of analysis. So this channel, though, is pretty important. Let me see.
And what's that timeline? Mid-October?
Late October. And clearly what we're doing here. So if you originally looked at this as a trader, all right, so we'll get into some channel trading. All right, look, I'll go into some details. So Dow daily-ish. 2020 part 2, 2022. Got it. Won't forget that one.
Mm-hmm.
And
the most important part.
Nah, investment advice. We're idiots. Don't do anything we say. We're so stupid. Okay. So this is, if you're looking at a channel, I spent a couple of years on reading channels. So a channel is like a diagonal consolidation. So consolidation is like if you take a box like this, and Ryan, this is market profile, as I talked to you about. So market profile or a box like this is basically what you're saying is this is the neutral line, the red line. Is this coming up clean on the stream?
Yeah.
So this red line in the middle of this box is your neutral line. This is like 0. All right. So this is like if you're at an auction, because the market is just one giant auction. This would be before the bids start. And then above that, you have all of your green, which is these are your buyers, meaning anything above this they think is a good deal. People are willing to pay this much money up here. And anything under this is your sellers, or people think that it's undervalued, right? So then you have an auction going all day long, all the time, 24 hours a day, where people are placing their opinions as to if something is overvalued or undervalued, right? That's all that's happening. And then when they go, yep, it's too far valued, I'm a buyer at this level. I'm too far not, then I'm a seller. Well,
so it's not based on actual price, it's based on opinion.
Well, opinion moves price because you have a buyer and a seller that match. Maybe a buyer and one person up in this range up here says,
Let me clarify then. Where are they getting this data from?
What I'm talking about?
Yeah.
This is the fundamental. I'm giving you this is how trading works. This is what trading is. It's fundamentally auction. It's an auction. It's a digitalized auction that you're watching on your screen. So I'm just kind of going over like what moves price. So like if you're at an auction, they're like, hey, let me get 1, 1, 1, 2, 2, 2, 3, 3, 3, right? 3 going once, going twice. Oh, I hear 4. So every time they do that, that's the same thing as price going up and up and up until they find a buyer, and they have to find somebody that's willing to buy and sell at the same price. So that's all that's happening at like at a micro level. Like algorithms are just moving so fast. So that's happening here. So what you have in then the whole auction market profile is you have what's called like extremes, right? So the theory with auction market profile is that 70% of all transactions, it uses 70% as like the number. So 70% of all transactions will take place inside this box, because if you look at the standard deviations, right, 70% of all action is inside this box right here, the black box. So the good trades, the high probability trades are up here. when you're trading. Right? Because what this is saying is there's always a reversion to mean. So long as we're trading inside this box, so long as price hasn't broken outside this box, there's a reversion to mean. So all your minnows are in here, meaning people that are just getting swallowed up, and all your sharks are on the outside out here, because it will revert to the price will revert to the mean as it brings it back in. Now, then what happens is you have like a breakout of this particular box, this consolidation, and you end up starting business in a new area. And then you have a new box that develops. But until that box breaks out, essentially, you want to be a buyer down here and you want to be a seller up here. Like that's just how it works with market profile. So you have meaning I could place like a, let's say I placed a $1 bet, right up here, and my target was down here, right? So if I took a bet up here with a stop over the top, because I'm saying, that's going into new business. If I go that way, then I have a 10-to-1 risk reward to get down to the bottom. I have a 10-to-1 shot at getting there. But if you're trading in the middle where the 70% average is, you got to be really on your game, because you are trading with probabilities not necessarily on your side. They're more balanced. So you may have like a 50-50 shot or 60-40 shot at getting your trade right. So why do I talk about all that? Because sideways consolidation, which is what we've kind of been dealing with a little bit. So sideways consolidation might look, I don't know, a great example on the screen, but it might look something like this, right? So price just kind of bounces up and down, and then it, maybe shoots out of it a little, and you kind of get up into this range. So it just bounced up and down in here, and then it starts to break out and it goes and does new business. Well, that's sideways consolidation. On the same token is a diagonal channel, which is a channel is the same thing with a little, but it has a bias. A channel has bias to it, whereas sideways consolidation technically doesn't, but that's also interpretation. But so we're trading the same thing in a channel. A channel is just like you take the square and you just move it at a 45-degree angle, and now you have buyers and sellers, and you can see it. You can see the same thing, the standard return to standard deviation return, or what I mean, standard deviations begin to return to, and this is all visual. It's just a visual thing, but they start returning. So if I was a seller, which is not, this is counter trend trading, but if I was a seller in any of these pieces up here, I had a good return coming back because I was at the extreme. If I tried to be a seller or buyer anywhere in the middle here, it's a coin toss. Which way are any of these bars in the middle on the black line going? And
that's the middle 70% you're referring to?
That's the middle. That's the minnows. Yeah. So that's the majority of the traders. So here, here's a couple good buys, and those go back up. So like that's the channel. Well, what happens then in a channel though is you have overexcitement as well. So you look at this and you go, oh, is this a good buy? What is this? What's going on? Are they breaking out of the channel? A lot of times when the channel loses control. So if you picture like a channel, like everything's moving like controlled. Everything is moving nice and controlled. And then all of a sudden it gets too excited and you have a little bit of that capitulation we talked about on another one. You get the waves get too big. It's like, we can't hold this thing anymore. We can't hold it, right? So that's kind of what happens up here is you get too much excitement and it starts to break out to a channel. So one of two things has to happen at this point. You've lost control of the ship and you got to jump ship, or you've started a new channel, which is possible, right? But either way, it's been heavily threatened. And as of this morning, really started last night, but as of this morning, you can clearly see the move right now is at least got to go back down to this channel. And now the channel, so really the uptrend over the past 2 weeks to potentially a month. I don't really know. I have a tough time visualizing what the last month looks like here. Maybe that. I don't know if I consider that bucked yet, because let me just see how this lines up. A lot of this is just visual because it's how other traders look at it.
I mean, it's all where you draw your lines, right?
Yeah. So that's why you just, you try to not, as a trader, you try to not overcomplicate things because it's what the majority are looking at, as I have all these lines on this chart. But so you could see there's really two channels visually. This is what I would have as two channels that are really in play. And I would say again, you get channels within channels, as you can see here. You have a channel moving within a channel. So as this channel moves down, and this stuff is just like so visual. For some reason, like when I look at this stuff personally, like it calms me. I don't know why. Like mentally, like I see this and it like comes together like a puzzle, and I'm like, it feels good to see for me. I have no idea why. Like I don't know.
Powers. I don't know.
I guess, yeah. It just doesn't it feel like it just makes sense? Like it fits. I don't know, not make sense, but it feels right to me. So you have the big channel here, you have the up channel here, and this up channel is breaking. So you have to have a very aggressive move tomorrow morning to push this into new, we're going to the moon 40,000 territory on the Dow, or you're going to have to come down and start testing these lines as a seller. So if you were a seller in this scenario, it would have been really good to have been a seller, a good bet. And it's a big counter trend bet, and counter trend can pay a lot, but it's not, you got to have the stomach for counter trend trading. But this is a good place to be a seller, because you go, all right, you probably, if you've been trying to sell every one of these up top, you've been, the payouts haven't been as good over the past few weeks. But when you catch that one where the trend reverses and you're in on that big arrow, if your management is good, you're getting paid. So, but again, you might have to take a bunch of losses to get to that point. So it's what your stomach can handle. So right now we're in that position. And that's when I talk about bucking the trend, is that we've bucked the trend over the past 2 weeks to a month. There's a big CPI announcement tomorrow. Things are leaning up. So the question, this is a pretty good chart to leave up. So I'd say for the very short term, as in the next like week or two, and I'm not saying this is like it's not an end of times chart. That was the Evergrande chart, but this is more of like starting, like, let's see what the other side of this looks like, because I don't think, since we've had the quarterly earnings from the banks that have like pumped in since the Evergrande move, that I don't think we've seen sellers in this market. I don't think they've been here. I think it's been a straight up move. And with this in place now, we could be looking at a scenario where we might see what the selling side starts to look like. There's a couple of days that threatened it, but this could start to look like, all right, let's see what if the sellers are still here. Anyways, that was a lot.
I think it's a good tee up to tomorrow, right? Let's do our show tomorrow, see how things progress from CPI report, and see if there's a continuation of this move, or, I think is a good analysis what you just did. And it's always fair to say everybody draws their own lines, right? So it's always a matter of what an individual trader is seeing.
Yeah, trader only has one interpretation, and that's theirs, their own. You can't, every trader, even if you're very close to somebody else, it's still not the exact same thing at the exact same moment. And that single moment can be the difference between, I think there was a trade a couple weeks ago, right, that I had that, like, it was the weekly one that got stopped out on year end, because mine went down one tick. It was one tick.
Well, literally one tick. Yeah, 1 point.
Yeah, it was literally one tick over an entire week. But if you were, and because you interpreted it something slightly different, even though it was very similar to what I was doing, but your interpretation or your management or the way you were doing it was slightly different.
Yep.
That 1 point makes the difference between one guy staying in and making a ton of money and one guy getting knocked out. And that happens all day long. So everything is just an interpretation of the way that you see the markets as a trader. And I think we'll leave this chart. This is one to follow here for the next, actually, I bet this is going to look a lot different. I might have to bring a new one up tomorrow morning, because by the time tomorrow morning hits, this is probably the hourly. By the time tomorrow morning hits, I don't want to say we could be at 36,000, but we could be at 36,000. Yeah, we could definitely go back to 36,000 from here.
I mean, we got there today, possibly. So
yeah, what do we have right now? 36.1.
36.2. 36.2.
Yeah, so we could go see that pretty easily, and then, but I would say, if all of a sudden we go there and we get into what's the next major support resistance? Probably this line right here. Oh. So I would say, like, if we break under the 36,000 line, they start having to, traders start having to think about where they're about to go, and you start looking at your chart going, all right, what are the most prevalent lines in play here? And then that's why you start. So you kind of go from diagonal trend lines because that's what everybody can see. And then when you lose those, you start going, all right, you might catch like that backside retest or like that kiss of death we talked about. But then from there, when you're switching trends, everybody starts moving to a vertical or a horizontal line. And these horizontal lines is because these are the only things that you can really work from or have information on. These are kind of your big ones. I'm not saying these are the only ones, but these are your big ones. So break this 36,000 and we start looking back at 35,000, 34,000, and those are 1,000-point moves. So you're talking about some volatility. So if all of that plays out correctly, which would start with like a, CPI's announcement tomorrow triggering this, I would say you're looking at some more news to come from behind it, because then you're talking like 1,000-point moves. So there's something else looming, but all that, you have to break the 36,000. You have to have CPI do that tomorrow. You have to have this trend actually bucked. And then all of a sudden over the next week, you start getting some weekend news that makes our viewership go up.
Our number one fan reporting for duty, Chris Klug.
Good. Chris, what you're going to want to do is I want you to slow down and then rewatch the entire thing several times to get all the information. Because I know you're big on studying film like that.
Reviewing
tape.
That sounds like Chris.
Yeah, he's big on studying tape. So, and this chart should make a ton of sense, especially if you're jumping in right now.
Yeah,
so
he gets it.
Yeah. All right. Yeah, that's great. All right, cool. We'll
see you tomorrow.